Boeing out with results this morning. The plane manufacturer reporting a more than $6 billion loss for the third quarter. That's its biggest quarterly loss since 2020. The new CEO, Kelly Ortberg, saying they need to focus on changing the culture at Boeing and stabilizing the business's execution strategy as well. Now, this comes as more than 30,000 union workers still set to vote on that new contract after today, or later today, rather, which could end the weeks-long strike. Joining us now to discuss, we've got George Ferguson. He's over at Bloomberg Intelligence as their senior aerospace, defense, and airlines industries analyst. George, it's great to have you here. Just talk to me about your reaction to the results out this morning from Boeing. I mean, it seems like it was better than perhaps the worst case scenario, particularly given the free cash flow news.
Yeah, I think the cash flow burn was a bit better than some had feared in the marketplace. And so we had seen them pre-disclose that and at least pre-disclose the operating cash flow burn. And so, I think everything here right now is about they need about $10 billion to run the company. They told us they have $10.5 billion on the balance sheet. So they have, right around the right amount of money to run it. We're watching that shelf registration, for additional stock issuance. That can be pretty dilutive, right? So I think if they don't get the strike cleared up tonight, I think you'll see them go into the marketplace and maybe take down a bigger portion of that equity. If you took down $20 billion in additional equity against a market cap of $90 billion, there's a lot of dilution there. There's over 20%. But I would say other items that stood out in the earnings. I mean, a lot of it's in the rearview mirror. Again, what matters the most is the strike vote tonight and getting those machinists back on the job and building airplanes. But defense narrowed losses year over year. They're getting closer to break even. Global services continues to perform 17% margin. That's a cash generator. Again, I think all of that sets it up for you got to get those machinists back and start building 737s. That's the path to better cash flow. That's the path to the recovery for the company.
George, how would you grade or how would you rate the job done so far by Kelly Ortberg? I mean, it's only been 2 months or so, but just in terms of the changes, the vision that he laid out further in his memo to employees today, do you think that those are the right steps for the company?
He's saying the right things, right? And so I totally agree, right? The culture has to change. It has to go back to a culture of great engineering and great manufacturing. It happens on the factory floor. We got some of his comments early before the call. So I think what he's saying is absolutely correct. Now, the challenge here, of course, always is where the rubber meets the road. He's got to strike a deal with the union, I think, that makes them, I don't even think I know, that makes the union happy to come back to work and build, what they're going to say are the best airplanes in the world, right? And so you can't drag them back to the factory. They've got to be happy with the pay rates they get here, the 401k program they get, and you got to bring them back to the floor, energize them so you can build good airplanes. That's a huge challenge. We haven't heard much we've seen a lot of written commentary out of him today. I think on the earnings call, we'll finally get to hear from his voice how he feels, but what he's writing is definitely the right direction.
Well, George, given the importance of what you just said, the idea that these are very skilled laborers, just getting them back onto the factory floor may not be enough. What wage range would you kind of be comfortable with in terms of an agreement for the union workers, given that they have to keep them happy, but they also can't pay them so much that the defensive part of their balance sheet kind of goes away?
Yeah, so I mean, to me, this 35% pay raise that they're getting sounds about right. I think the way I benchmark it is we saw the port workers, they were 60% over 6 years, so it's about 10% a year. There's a little bit less than that. We just saw Textron's come to an agreement with their machinist. It was a bit below 30%. So does Boeing live in the middle there? I think so. The machinist may have thought they deserve 10% a year, but I think this still is a pretty good deal. No one's going back to pensions, what the machinist wanted, but they sweeten up the 401k, some of the matching, some incentives in the 401k. So to me, this seems like a pretty good deal. And then I think if they agree to it, again, you got to bring them back and remind them that you care a lot about them. It's, sort of the old people skills, that they're super important to the business, that what they do every day matters. You want to listen to them so you can build a great product. And so I think that'll be the second part of this act once they get the agreement.
Yeah, George, what do you think the timeline of that looks like?
Well, I mean, again, I think the agreement looks pretty good. The workers have been out for a month, so if they can get something tonight, they could probably put people back in the factory floor. I would bet within this week. Now they've got to get the supply chain re-energized, the factory re-energized. I mean, I would think something like that. They've been out a month. I would think within another month they could start to get things rolling off the factory floor, airplanes built and delivering. But it's going to take them, I think, a month, month and a half before before they would sort of get things rolling like it was prior to the strike.
George, before we let you go, I want to get your take on the journal's reporting that Spirit and Frontier have revived their talks about a potential merger. How likely do you think that is, given that the FTC pressured any potential deal between Spirit and JetBlue earlier this year?
Yeah, so I wonder if the FTC, if they think that path was the correct path given the outcome here. Spirit's has some challenges, so I would think the FTC might look at it, in a nicer way. I guess personally, I think the market for economy seats appears overcapacitized, if that's a word. And so I'd wonder how much Frontier would be willing to pay for basic economy capacity. But I think if they get the right price, maybe. And I think, again, the FTC might look better at it this time.
All right, George Ferguson, always great to get your insight. Bloomberg Intelligence, Senior Aerospace, Defense, and Airlines Industry Analyst. Thanks so much.